Money, Money, Money Insurance Special, co-presented by Exide Life Insurance.
Hello and welcome. You're watching Money, Money, Money. I'm Samira Abdi. The whole point of insurance is guarding against the risk of a certain eventuality. Health and medical issues are one such risk, and a big one at that, given the rising cost of medical care, and which is why Harshvardhan Roongta of Roongta Securities joins in this week and for the coming week as well to take us through the finer details regarding health insurance. Harshvardhan, always a pleasure to have you. So good of you to join in now on our insurance series. Since we're talking about health insurance this week and the next, first up, why don't you tell us, if someone were to go and buy health insurance right now, what are the 4 or 5 things that they absolutely must know?
Well, Sumera, to begin with, there is nothing better in a policy than its own features. So while the sector has been opened up, you will find so many options available these days. What you need to do is first check the features of a particular policy. So you need to make sure that there are no sub-limits into the policy. Now some segment of companies offer insurance policies which have certain restrictions. Now in the sense of a room rent. Now one segment of companies offer policies which have 1% of the sum insured as the room rent limit. The others would have no such limit. So in case you're insured for a cover of 5 lakhs, for the policies which have a sub-limit, you're entitled to stay in a room worth 5,000 rupees. And in case you stay in a room or you get admitted into a room which is more than 5,000 rupees, all your other expenses are proportionately reduced. Your OT charges, because they are again linked to the room category.
Is it not that just the claim for your room rent would be cut off at that amount?
No, not that way. It doesn't work like that. Now take this example, if you have to elaborate. You have a sum insured of 5 lakhs. You're entitled to stay in a room which is 1% of the sum insured. So up till 5,000 rupees worth of a room, if you get admitted, your claim is payable, otherwise if it's admissible. In case you stay in a room, for calculation purposes, if you get admitted in a room which is 10,000 rupees per night, what happens is all the other expenses which are proportionate to the room category, like OT charges, are basically linked to the category of room that you're admitted in.
Right.
So you will be paid the OT charges only equivalent to that much, which was linked to the 5,000 rupees worth of a room. So not only the room charges, but all the related charges will also proportionately get reduced. So this is a major restriction, considering that you have a cover of 5 lakhs, your claim is up to 1 lakh, but it is going to be reduced because you've stayed in a room which is above the sub-limit.
Alright, so any sub-limit, any sort of sub-limit whatsoever is something that you absolutely must avoid.
Most certainly, because you have another options available to you these days which do not have those restrictions. So sub-limits on room rents is one. Then there are certain treatments, the maximum cost of which has been restricted in case of cataract. Now all the public sector enterprises have a limit of 24,000 rupees in case of cataract surgeries per eye, which is not the case with some other options that are available. So you need to see these kind of restrictions within the policy. Then this other thing that you would need to see is the waiting period. Some companies have a waiting period going up to 4 years for a particular ailment, wherein you will see that the other company has a waiting period of only say 2 years. So what you could do, if there has been a history in your family of a particular ailment, you need to specifically look for the waiting period in that policy which you're going to take.
Okay, so amongst all of these, right, sub-limits, waiting period, as well as the maximum allowed deductible for an illness, what if one policy has no sub-limits but a really high waiting period? I mean, which should you weigh as more prominent?
See, it will be more dependent on your circumstances. In ideal circumstances, if there are no restrictions whatsoever, you should take a policy which has that kind of a feature, because if you are covered for 5 lakhs, you're paying a premium for 5 lakhs. So any claim up to 5 lakhs should be paid in a year, whether you stayed in a room which is 5,000 worth or a 10,000 worth. Because you have taken a cover for 5 lakhs eventually. Against which, if there is a higher waiting period and you feel that there is nothing otherwise in your family as an history also, then you rather go in for a policy which has less restrictions and gives you the claim actually up till, covers you for the maximum amount. Because invariably you will see when you go to the hospital for admission, it's not what you ask for. It's more on what kind of category rooms are available. And you have no way to check whether if a room worth 5,000 is available, because if at the hospital they're telling you that no, there is no room, and you need to take the room which is available, which is 10,000, you have to get admitted. There is no choice.
Yeah, that's true actually. Okay, what about the other kinds of policies? I mean, there's family floater, there's individual. What kind of people are either or suited for?
Well, see, the option that you take is basically these family floater and individual basically are options. Now you need to cover yourself for medical expenses that you incur in a hospital. Now if you take if there is a family of 3, a husband, wife and a child, what you need to do is make a comparison. There is no right and wrong. You need to make a comparison. So if an individual was to take a 5 lakh policy for the husband, for the wife and the child, if for example the premium comes to about 15,000 rupees, against which if you take a family floater, then what happens is the entire family is covered for 5 lakhs. And any one member can, or any member in the family can make a claim up to 5 lakhs. If you do a cost comparison, you will see in case A, where each individual takes 5 lakhs and if the premium hypothetically is 15,000 rupees, or on the other hand each family member, the entire family takes a family floater policy, you will see the cost differential is only 25%, about so. So in one case where it was 15,000 rupees, the other would be, in a family floater, would be about 25% lesser. You need to make sure whether that 25% saving in premium, is that a motivation for you to restrict your entire family into one cover. If that is not the case, you rather take a policy which is 5 lakhs each, because then each individual is not dependent on any other one making.
And I guess also the features depend on the oldest family member in a family floater, right?
That's true.
So that's another disadvantage.
In case of a premium calculation, the premium is computed based on the eldest member in the family. So obviously you will have to pay higher for the younger one. But overall also, if you are comparing, the premium in a family floater is cheaper by about say 25%. In absolute terms, that would not be a huge difference. It would be about 3,000-4,000 rupees whatsoever.
Yeah, but definitely not worth the risk. Okay, I know you mentioned 5 lakhs is just a hypothetical number, but what is a good number? I mean, how does one know? I mean, how do I know what's a good amount for me?
Well, there are 2 ways to go about it. The first factor is you take an estimation of the kind of treatment that you will take in the city that you're in. Now in metros, obviously the cost of health is cost of hospitalization or medical treatment is higher. So we would say a 5 lakh is an amount that you should definitely consider. If you can go higher up to 10 lakhs or 15 lakhs is even better. But 5 lakhs is the minimum that you would want to take. Now let's look at an argument that we normally come across, saying that tier 2 cities are less expensive. I would say if you look at the premium component, if you go in for a 3 lakh policy or you go for a 5 lakh policy, the differential amount in absolute terms is not large. So it is always better to go in for a cover which is higher. Now the other element would be the premium paying capacity. Now medical insurance is not the only factor that you will include in your financial plan. There are many other things you need to. So you need to also put some mind onto the premium that you are able to pay or allocate for this particular purpose. In any case, I would say 5 lakhs is a cover that every individual should at least take for themselves.
Alright, so that's the bare minimum. What is a defined benefit plan, and is it significantly better than a regular plan?
Well, within the health space, there are different kinds of policies. The first one that we've been talking about till now is an hospital expenses reimbursement policy. So what it means is basically it works on the principle of indemnity. Whatever is your expense that you've incurred, only that much will be paid. You have a cover of 5 lakhs, but if you've incurred an expense of 1 lakh, 1 lakh will be reimbursed to you provided it falls under the claim. On the other hand, there are some kind of defined benefit policies which you've just mentioned. These are basically critical illness, if I may have to say so. So assume you've suffered with a heart attack. You get admitted into an hospital. Whatever your expenses are taken care by your Mediclaim policies. On the other hand, defined benefit policies would say you've suffered with a heart attack. We give you a lump sum in your hand. Whether you are hospitalized, not hospitalized, they're not concerned about it. And one lump sum is given out to you. Why is that, and what's the purpose behind that? The idea is that because you've undergone a particular ailment, there is a reduction in your earning capacity, in your productivity. So there is going to be some loss of income due to that. Once you've diagnosed or once you've suffered with a heart attack, you surely cannot immediately get back to work in the same proportion the way you were doing it earlier. So there is going to be loss of income. So this defined benefit policy is primarily designed to compensate that loss of income. So in real sense, these are not comparable. Whereas one is a reimbursement policy where the actual expenses incurred have been reimbursed. The other is compensating you for a loss of income. So in an ideal situation, you should take a combination of both.
So this is like a rider that you can add on.
Absolutely. And even today we have standalone defined benefit policies available. Earlier they were forming a part of a life insurance cover in the form of a rider. But these days we have standalone defined benefit policies.
Alright, so that sounds fair, but we need to take a very quick break on that note. Harshvardhan is going to stay on with us, and when we return, he's actually going to be answering some of the queries that have been sent in by our viewers. Do stay tuned to Money, Money, Money.
Money, Money, Money Insurance Special, co-presented by Exide Life Insurance.
Welcome back. You're watching Money, Money, Money. So far, Harshvardhan Roongta has detailed a lot of the aspects regarding health insurance, and it's time now to open up the lines to our viewers and answer their questions. Joining up first up is Manmeet Khanna, who calls in from Chandigarh. Hi Manmeet, how can we help you?
Both my parents are about 6 years of age, and I'm looking for health insurance for both of them, hoping that it's not too late already. Can you suggest me some options?
Well, Harshvardhan, this is really, the sort of question we get very often, because a lot of people like Manmeet realize very late in life that their parents need insurance. Or a lot of people themselves realize, when they're 50, 60, nearing retirement, that they need health insurance. Is it too late for these people? What are the kind of options that they have?
Well, ideally, you need to have the cover as soon as you can. Primarily because anything pre-existing gets excluded into your policy when you take. So the earlier you take, it leaves your saving yourself from these kind of exclusions. Now, while having said that, we also believe that having a Mediclaim or a hospital expenses reimbursement policy is a must in every person's portfolio. Considering that the age has, it's been 60 plus years in age, you need to be very careful. Let's not blindly go by the notion that you must take a cover. Why? There are certain limitations. One, whichever policy you take will have a co-payment option. What does co-payment mean? If you have a claim of 1 lakh of rupees, even if it's admissible and it's payable, you would have to bear a portion of that claim on your own. So in this case, if there is a co-payment option of 20%, every claim 20,000 rupees is what you will have to pay, 20%, and the rest will be paid by the insurance company. The second element is the premiums are going to be really high when you compare with a person who's younger in age. So you need to do that cost benefit analysis, and you need to decide whether you still wish to go ahead with this kind of a policy. If it fits within your scheme of things, yes, you must go ahead. However, I would say do not go by the blind faith that you must have a cover irrespective of the cost and the features that are there. So little difficult to answer this query unless you really sit down with those numbers, do some math, and then decide whether you want to carry on with this or not. But all insurance companies today would be offering a senior citizen insurance cover, so you can possibly explore some options within the public sector and the private sector.
Yeah, that's true actually. So Manmeet, as bigger conundrum as that sounds, you really can't put any amount of money where health is concerned. So perhaps the advice is to consult a financial planner who will be able to go through your particular financials and advise you about how you can go ahead. But thanks very much for calling in. All right, up next we have Sapna Shah, who's called in from Mumbai. Hi Sapna.
I am Sapna Shah. I am not satisfied with my health insurance provider. It is possible to shift the company. Will any money get deducted?
Alright, so policy portability, how difficult or easy is it in reality?
Well, one of the finest things that possibly must have happened in the general insurance sector is the portability of insurance policies. Earlier we had seen a situation wherein people were stranded with a particular policy, and only because they were insured for a longer period of time, they did not want to miss out on those waiting period exclusions, miss out on all those continuous policy benefits, that they could not move to another insurance company. With the insurance policy portability coming in, it has really become very convenient. In case you're not happy with your existing insurance policy, whatever reason, or you find another policy which is better in terms of features and cost, you can apply for portability. There is no cost associated to this. There will not be any deductions, just that there is a procedure which you need to follow, and there is a timeline for that. Whenever your policy is due for renewal, 45 days before, you will have to initiate the process of porting. which means you contact the new insurance company that you want to move your policy into, fill up the application form, fill in an portability request form, which is an IRDA form. So you fill in giving the reasons why you want to port, and you submit that to the insurance company. The insurance company will then process it, and within a specified period, which is 15 days, they're supposed to get back to you, and if the policy is accepted by them. If they are accepting the policy, then you can easily port into the new company, and all your exclusions or the waiting period exemptions, everything will be carried forward, and you will go into the new policy. The only thing that will not be carried will be the cumulative bonus. If you've got some bonuses accrued in your previous policy, the new insurance company will not give you the benefit of accrued bonuses being transferred.
Alright, so that's fair enough. Sapna, I hope you find that information useful. Thanks very much for calling us. And Harshvardhan, thanks very much for joining in. We'll see you again next week, where we're going to take forward this discussion on health insurance. As vast a topic as it is, can't be covered just in 1 week. But thanks very much at the moment. Alright, and here's something that you may find interesting. The next time that you have to fill a claim form, here are the factors that you need to look out for. The next time you're looking to make a claim, here's what you need to look out for when filling out the form. First up, look at section A. This is where you need to fill out the details of the primary policy holder, like their policy number, name, address, and so on. Next, section B requires details of your insurance history. This is where policyholders need to mention whether they hold any other policy besides just the one, as well the sum assured, and so on. Section C requires details of the person being admitted, like their name, relationship with the primary insured, and so on. When you come to section E, be sure to fill the first 2 columns carefully. Total costs have to be split under the various heads. Pre-hospitalization expenses refer to costs incurred in treatment up to 30 days before hospitalization, while post-hospitalization expenses refer to treatment costs up to 60 days post-hospitalization. In case you haven't made any claims for 3 or 4 years, you may claim up to 1% of the total sum assured as preventive health checkup. Section G requires that the policyholder must disclose the details of their bank account. This is because IRDA, the insurance regulator, now mandates that no checks can be handed out and that the claim amount can only be credited via direct bank transfer. That's not all. Do make sure that when you turn to the 3rd page, that your hospital themselves have filled out the required details. Alright, so now that you know what to look out for, let's also tell you what many of these terms mean. Ambulatory care refers to all types of health products and services that do not require an overnight stay at the hospital. And with that, it's time to take a very quick break. Still ahead is our tip of the week, and if you haven't guessed already, it's on health insurance.
Money, Money, Money Insurance Special, co-presented by Exide Life Insurance.